Hi there, Nick here, and today we are going to discuss about technical analysis, the basic course, part fifth, right? And this is about single candle patterns, right? And if you see, we have discussed about the history of technical analysis, the terms used in trading, types of chartings, in which we have seen that candlesticks are perhaps the best charting types for raw price action, and we have also seen the time zones in which we can trade, right? So in this video we are going to see about single candle patterns, right? Before starting, make sure you have subscribed to our channel, and don't forget to press the bell icon to never miss a notification. So now let's get started with the topic. As you can see here, we have three uh, type of patterns. The first is single candle, the another is double candles, and the third is triple candles, right? If we start with the single candle patterns, the first comes to our mind is dojis. Now dojis are such candlestick patterns which are very reliable according to me and even other experts also, right? So we have divided dojis into two parts, that is Dragonfly Doji and Gravestone Doji. We are going to understand and we are going to see a trade, how we can place a trade and what is the logic behind it, and what are the how can you identify a doji in your charting tools, right? So let's see, the first this is how a Dragonfly Doji looks like, right? So the first question is that how will we identify the Dragonfly Doji, right? These are few characteristics. Like the first one is the open is equals to high equals to close, right? It is a T letter shaped candlestick pattern, and there is no to almost no real body. The lower shadow here is very long, right? And what is the logic behind this? We are going to understand that actually. Bears have dragged the market down and bulls fight strongly to reach to the opening level. Now longer the shadow, more effective the bullish trend. You can expect more, effective the bullish trend. So let's understand how we can trade on Dragonfly Doji. So look for it in downtrend and wait for the next candle to close above the high of Dragonfly Doji. It is very simple. There should be a preceding downtrend and we should wait for the next candle to close right above the high of Dragonfly Doji. Now this would imply that the bullish force is there at the end of the downtrend, and it can be a trend reversal, right? We will take the long position above the high of Dragonfly Doji and we'll keep a stop loss below the Dragonfly Doji, right? Now there are two type of patterns. One is trend continuation pattern. If a trend is in a, say, in uptrend, and if a pattern arrives, right, if XYZ pattern arrives, if you there are it can be divided into two parts. The first is the continuation pattern, which will indicate that the trend is going to continue, and another is a trend reversal pattern, which will indicate that the trend is going to reverse now. So dojis are a reversal pattern and the reliability is high. Now I'm going to scale each and every candlestick patterns on three reliability levels. The first is low, medium and high. So their importance is very high. So I've started with this only. Let's try and understand a live example. We have taken example of Bajaj Finance, and this is a daily chart, as you can see here. And on this 26th November 2018, right before I am talking about previous week of this recording session, we have got a Dragonfly Doji. Now in practical case, you will not, it is very difficult to find the typical doji, and if it does, then it will be a great symbol, and it is very effective. But it is very difficult. So in the nearest example, I found out this particular doji here on 26th November, right? And let's see, we have a downtrend here, right? It is kind of continuing the downtrend, but and at the same time we have a doji here, and the next candle is closed above the doji. So we are going to place the order here little bit above the high of doji candle, and stop loss little bit lower on the doji candle. So if you see, we have tried to maintain a risk to reward ratio of 2:1. So we have got our trade on 28th of November and we have booked the profit on 30th of November. So we were in the trade for 3 long days, and here you can see that we have earned around 5.6 percentage in this trade. So this is perhaps a very good trade in which money management and risk management rules are also applied, and it has given some pretty good results, right? Now let's move on to Gravestone Doji. Gravestone Doji, as you can see here, it is totally opposite of Dragonfly Doji, in which again, how to identify a Gravestone Doji. These are the few points, like open equals to low equals to close. Now there is an inverted T letter shaped of candlestick pattern, and again in this also there is almost no real body and there is a long upper shadow, right? What is the logic? Again, the logic is almost near similar. The bulls push the market up, but the bears fight strongly to reach to the closing level. The longer the shadow, more effective the bearish trend, right? And how we are going to trade on Gravestone Doji? We are going to look for this doji in a uptrend, and we will wait for the next candle to close below the low of Gravestone Doji. We'll short the position below the low and we'll keep the stop loss above the high of Gravestone Doji, right? Again, it is a trend reversal pattern, and this Gravestone Doji has a high reliability points from my side, right? So we are going to see again a live example of this on AppTech, right? On 15th of March 2018, we are in a daily candlestick chart. There is a doji here, right? There is a little bit of uptrend and there is a doji here, and here you can see that we have placed a trade, and yeah, the next candle has closed below the low of doji. So we can see that we have placed a trade and it has given a same 2:1 risk reward ratio, and the trade has initiated on 19th of March and given us the profit of at least 5.98% on 20th of March. So we have booked the profit, and that was it, right? So in this manner you can trade with the dojis. Now I would like to say that you should never trade basis on this setups, because these are this add-ons to your trading strategies. These are not your trading strategies, right? So you should not trade basis on this particular single or double or triple candlesticks. This is just for your information and education. This might help you to understand what is the sentiment of the market, what are the bulls and bears doing in the market, right? So this is just a raw price action and nothing else, right? So that's it for today. You can contact us on our email, or you can contact us on WhatsApp also, and make sure to follow us on the social cover, and our handle is Trade with Nick, and the links are given in the description below. Thank you so much and see you in the next one. Peace.